Thank you to the witnesses for coming today. The purchase of a home is the most important purchase that any Canadian citizen will make. I still hear stories about how my parents, saved and saved and saved and bought their first home in Brampton, and they also complained about the double-digit interest rates they were paying in the early 90s in the housing market and the concerns that they had back then. On a regular basis, the housing market doesn't come up in my neck of the woods except for how hot it is. And there's a shortage of supply, and that's driving up the prices of homes, and people are concerned about that. But even people that have paid off their mortgages, their house is still their number one asset, and they're still concerned about the overall housing market, and they don't want what happened in 2008 in the United States to happen in Canada. My question really is on the appraisals, because I've been hearing feedback and you're the only witness that's brought up the concern of mortgage fraud, and that people, and this comes to the appraisals as well, is that homes are being overappraised so that you're qualifying for a larger mortgage. And then couple that in with the mortgage fraud, you're stretching yourself you're very, very leveraged. And I feel like that's the biggest concern in the market, and it's something that's not visible. So your comments on that would be really appreciated.
The issue of mortgage fraud is also very complex. We are aware from interactions with our members of situations where they've actually prepared an appraisal report, and somewhere along the road, the base amounts have been altered. So hypothetically, a member prepares a report valuing the property at $750,000, and at the time of mortgage origination, the report has been altered to $850,000. So in that case, in those types of scenarios, in fact, our members are collateral damage, if you will, to the fraud. They're unwillingly involved in it. What we are able to do through the appraisal process, though, is to help identify some of the potential red flags. For example, our standards require our members to provide a detailed 3-year sales history of a subject property. So if there are incidences such as flipping that are creating a fraudulent situation, those can help raise red flags. Certainly we can do things like identify the occupancy of the home. If the property is being appraised as a owner-occupied development, and you find out when the appraiser arrives that in fact the owner is not occupying the development, that too is information that can provide insight to the lender to help address fraud. When we're looking at the 52% increase that Equifax quotes, I think it's important to recognize as well, though, that mortgage fraud is a very broad term, and it can be, I've heard it phrased as shelter fraud, where I provide a gift letter to my children indicating that there's no expectation that they will pay me back, but behind the scenes they have every intention of paying me back. Now, they're doing that to acquire shelter. They're not doing that to defraud the system, but technically and notionally that is in fact mortgage fraud. So it's good to have the understanding. Appraisers can be part of the process in addressing that. Again, there are numerous examples that we've been informed of where our members have been collateral to that, but again have not been involved in the process, but have found out later in the process that in fact their work has been doctored to help perpetrate a fraud.
From a practical perspective, so let's say somebody comes and you appraise the home, and your appraisal report, does that go directly to the mortgage? So would it go directly to the bank?
It depends on who your client is, so it really depends. In most cases, it will go to the lender because they'll be the intended user of the report. They'll be the ones who rely on it.
So, and what would be another scenario, like the real estate agent gets it?
Highly unlikely. In most cases, it is prepared for the intended user, which would ultimately be the client, who would be the lender, typically.
And is it rare for the lender to call and to verify the report, or do they take it as, we have this report, it's a checklist on our required documents, and that's the end of it?
Many lenders have safeguards and policies in place where original documentation must be received from the appraiser. And so, in fact, there is some safeguards, electronic signatures, digitally secured. There are some mechanisms with respect to policies that they have to protect that process.
One of the efforts that our organization has been involved in, for instance, is working with lenders to help them better understand how they can look at appraisals and make sure that there has not been a fraud perpetrated as a result of it. Just some of the things that they might want to potentially consider.
Does any of the other witnesses want to add a comment on this segment? We're out of time. David?
I'm fine.
Okay. Mr. Albert.